I think at this point it would not be a Dash London without you kicking things off. Before we get into it, and I want to hear about your trip that you've recently made to Washington, D.C., talking about regulation. Can you just give a quick background on who you are for the audience?
Hi, I'm David, CEO of LMAX Group. We operate 6 exchanges globally. 5 of them are in fiat land, mostly in foreign exchange. One of them is called LMAX Digital. That was our fastest growing exchange. We set that up in 2018. I think last year, whisper it quietly, only one exchange traded more Bitcoin than us. So we're pretty happy with how that's going. But I think most importantly is that we're a sort of merger of traditional finance and crypto. So if you like, the fundamentals of traditional finance meets the imagination of crypto. And that's what we're trying to bring to the ecosystem.
So it's great that we're starting out with this talk because I think we're going to touch on all 3 of those themes that I kind of outlined in that opener there. First of all, you were just in DC walking the halls of power, so to speak, to borrow your phrase. What was that like?
Learned a lot, actually. I think what's very heartening at the moment, and we're going to talk about it later, one of the big blockages for institutional engagement is the lack of regulatory determinism. And sometimes you get frustrated. I get frustrated in this country. I speak to His Majesty's Treasury. I speak to the Bank of England. I speak to the FCA. And you get a bit frustrated at the seemingly lack of progress. The same in the United States of America. But at the moment, they've got 2 draft bills. I'll see if I remember them. Loomis Gillibrand and Boozman Stabenow. It's unlikely they're going to get passed. And they're focusing really on Bitcoin and Ethereum. This Congress ends when? The end of December. It's unlikely they're going to get through, but they're talking about it. And they're bipartisan, so both sides of the House are looking at it. Likewise, they've got 2 draft stablecoin bills. I think really that's where they're looking at the moment. So there is a chance they get through this Congress. But it's probably a very small chance, 10%. So the fact is they're thinking about it. All the headlines are Mr. Gensler and SEC enforcement. That is an important part of regulation, actually. Enforcement is important. And it looks very much to me as if they're heading towards CFTC regulation. So I think just the fact that it's spread across both the Senate and the House, they're thinking about it. It's inevitable in the next Congress that there'll be regulation of this new asset class. And I think our job as an industry is to try and educate them in the United States, and the same thing in Europe and in Asia and the United Kingdom. So yeah, look, I left heartened that they really are considering this asset class, and there will be some structure that we all recognize and can work within a couple of years.
So ever since, basically the creation of crypto, there's been this looming overhang, right? The regulators, the powers that be are never going to allow this. So I've got a 2-part question for you, since you were just in the US. To what degree is the US regulatory apparatus really in the driver's seat? Crypto's a global industry. Is it really the CFTC, SEC, Treasury that's in the driver's seat, or are there other regulatory bodies that matter? And should we be expecting some form of draconian come down, or you just said you were positive there, so are we going to get through this, basically?
Last part first, we're definitely going to get through it. So they are aware that it's here to stay. Now, what is it? The problem that they're dealing with is, and look, it's the same with us in the industry. We put crypto, DeFi, securitized tokens, all in the same bucket. We've got to be pragmatic. So I think that the main challenge at the moment is they're looking at, in Gensler's terminology, 19,500 unregistered securities. You can't regulate for that because they're all different. Also, 95% of them are going to go to zero. So don't regulate for something which is going to go to zero. Let's look at 65, 70% of the market. What is Bitcoin? What is Ethereum? Are they commodities? For what it's worth, incidentally, Bitcoin's a currency in my opinion, but I'm not going to win that fight. So we're saying it's a commodity, so it's probably going to be lend towards the CFTC. Now, what do they do with the next tranche? Cardano, Solana, the next sort of top 10 that gets you to 85%. How can they create a regulatory framework for that? So I think you need to work that out, maybe create some sort of sandbox so that the tokens that aren't Ponzi schemes, So Jamie Dimon is right about the bottom 17,000 of these tokens. How do we create a sandbox, perhaps a self-regulatory sandbox where you can register it, but you're not subject to full disclosure and the full regulatory regime as you develop these great scientific experiments? So I think that's what they're looking at. Now, what I would say, word of caution to the United Kingdom, to the United States, and to other well-known regulators is that we have no divine right to own this nascent asset class. So I made this very clear in Washington. The biggest futures traders on the street in fiat and in crypto are based in the United States of America. Those same names are the biggest in crypto today, but they're trading through offshore names. It actually doesn't bother them. So either, dear policymakers in the United States and the United Kingdom, either get it right or it's going to be gone forever. I mean, it's not beyond the realms that the global capital markets hub for crypto, for DeFi, could be in Eastern Europe, could be in Asia Pacific. We're dealing a lot at the moment in Singapore. So we launched a new exchange in Singapore this year, the first one ever with fiat and crypto side by side. The MAS is very forward thinking. They want to own this asset class. Now, history says, going back to the 1930s, right? The Glass-Steagall, the Banking Act, the Securities Act, the United States is going to create a framework so that it can be the leader in capital markets. They need to get a move on. I think they've realized that now, but they need to create that framework soon. Otherwise, the hub of crypto is not going to be in the United States of America.
Let's zoom in on this particular market cycle, right? So maybe the appropriate place to start there is with the macro and this whole overhang of raising interest rates and hikes from the Fed and breaking markets and all that kind of stuff. To what extent do you view that as being the driver's seat or the proximal cause of this particular downturn?
It's a bit of both, right? I mean, all of us out there in traditional finance and crypto, it's been a tough year. Not the toughest year at LMAX Group. The toughest year was when we weren't printing any tickets back in 2011. But in terms of macro climate, yeah, the toughest year. Rates, Russia, recession. That's a triple whammy, which has affected every asset class. That's the main driver, I think, for the crypto downturn. The reality is we're in a risk-off environment. Certainly the biggest assets, Bitcoin, Ethereum, are risk-correlated assets today, so they've all been sold off. And the reality is there's not a lot of new money entering any capital market right now. And there's certainly not a lot of new money entering the crypto space. But, green shoots. The institutions are making themselves more ready than ever for the inevitable spring that will follow the winter.
That was where I was going to go next here. Let's maybe break this up, the impact this downturn has had on the retail part of the market and the institutional. Let's start on the institutional first, right? I know you speak to, maybe we could divide that in between institutional allocators, so hedge funds, traders, that kind of thing, and banks, right, which have long sales cycles. I know you talk to a lot of banks. What are you kind of seeing on the institutional side of things, activity-wise?
So if there's any bankers in the room, I apologize. But banks move, they're so big nowadays, they move slowly. In Al Pacino style, they move inch by inch. They were moving inch by inch in 2021. They're still moving inch by inch in 2022. So actually this downturn hasn't affected their momentum very much. If they were committed in 2021, they're committed in 2022. But they weren't quite there. But if you look around the place, you saw the announcement last week, Bank of New York Mellon got a custody for their first customer. So that's a good sign. They have all of the bulge bracket banks. If I think of the four things that banks do for a living, typically split into two, right? Spot and derivative. They invest in spot, they invest in derivative. They trade spot, they trade derivative. They clear spot, they clear derivative. They store or are custodians for spot and derivatives. Right now, if you looked at that matrix, they've got about 50% coverage. And the only thing blocking them is two things blocking them really are credit access and regulatory determinism. But to be clear, they're all invested. To be clear, every bulge bracket bank is trading the future. 50% of bulge bracket banks are clearing the future. And until last week, none of them were storing or being custodians. One now is. Where one goes, the next two biggest will follow. So that's the banks taken care of. I'm positive that whenever they have regulatory clarity anywhere on the globe, at least 6 of the top names will fill in the blanks on that matrix, and they will start to trade both the spot and the derivative. And I expect a lot more of the leading custodial banks to make announcements in the next 6 to 12 months. On the other side of it, I think it's fantastic. Look at the names that come in. Someone says, you're worried about competition. No, I like competition. I work mostly in foreign exchange. So I've only got 53 competitors when it comes to foreign exchange. But you see NASDAQ entering the space, you see Fidelity entering the space, BlackRock announcement, Bank of New York Mellon. These are fantastic names for the future crypto ecosystem. So yeah, we're gonna have a tough 6 to 12 months, maybe a bit longer. But beyond that, this is gonna be as normal as accessing the gold market.
Now, do institutions, are they a driver to get us out of this market cycle? Are these investments that they're making now going to bear fruit, and that's going to be partially what takes us out? Or in many cases, it seems like, having gone through many bull markets, they're followers, right? And there's all this hype and media coverage, and the price is going up, and that seems, from an outward perspective, to drag them further and further in. So what is the causal effect there? Do they help us get out of this market downturn, or do they end up following?
I think long term, so let's face it, right? Let's all be honest in the room, right? This is a very, very small asset class. Total market cap, if I'm bullish, $1 trillion. That's tiny. Foreign exchange, my core market, trades $7 trillion every single day. Total assets in custody today, $200 trillion. So today it's 0.5% of the whole of the world's assets. It's tiny. Now, all the readiness that I just talked about, all the preparation going on in institutions, that's so 3 to 5% of traditional assets can be directed towards crypto. Ergo, total market cap of crypto should be in the region of 6 to 10 trillion. So on a longer time horizon, I'm going to say 2 to 3 years, for sure, that weight of institutional money will drag us out of this downturn. Now, in the meantime, dragging us from 1 to 1.5, dragging Bitcoin from 20,000 to 30,000, I think that's a little bit going to start with consumer confidence. It's going to start a little bit with private investors. It's going to start a little bit with more asset managers investing our money in the space. But I can't see that happening until we have more certainty in the macro environment, right? Until, to be honest, we're in the midst of a recession, or when we're at the height of rates rises. We're not there yet, so I can't see much to change, to drive the crypto market up in the next 3 to 6 months.
Maybe let's talk for a little bit about the other side of the market, the retail side. It seems like retail has left us a long period of time ago. To be honest, when do you see them coming back? How important is retail part of the market as compared to the institutional?
Look, every traditional market, I'll go back, sorry if I'm boring you with foreign exchange stories, but the reality is in foreign exchange, and I believe it's the same in equities, retail represents about 20% of the market. They've been hurt, right? Not just in crypto. They've had a damaging, tough, rough 6 to 9 months, right? So those that are still there are holding on. And there's not that driver that says, there's not that FOMO, right? Where you've got to get into crypto today. They've got time. So I think we shouldn't expect retail to drag us out of it. And I would say for the good of this marketplace on the long term, we must protect retail investors. If you want that 20% to be there forever, we must protect them. There is zero consumer protection today for retail crypto investors in the United Kingdom, in Europe, in the United States. If you want them to be around for the long term, if we want them to keep adding their hard-earned funds or a percentage of their hard-earned salaries to crypto, then we've got to protect them. You've got to give them a right of recourse. You've got to give them an ombudsman. You've got to give them training. You've got to give them education. You've got to protect them from some of the 3 or 4 liquidations, right, that we saw this year that frankly are way too hard to understand. It starts with market access and market education, right? It's very hard for anyone to understand what went on with Terra Luna, and we're in the marketplace. It's really hard to understand. We've got to protect retail. We've got to protect private investors. There's no way they understood what they were putting their money into. So I think that's important for us going forward, and hopefully better regulatory frameworks the world over will help that protection. And guess what? That protection will also help it grow.
I want to maybe conclude our talk here on the title of the talk, which is green shoots, right? So you've seen bear markets, not just in crypto and other asset classes as well, but especially in crypto. Walk us through how this one might feel a little bit different, if it does, than previous bear markets.
I think the chartists will tell you we're at a higher low. So that's good. The value of the asset class is much higher. There are many, many, many more entrants in the market. You know, look at LMAX Digital, where even though there seems no reason to invest, we have our client base is up 20% in the past 6 months. That's quite incredible if you look at the price action. So I think the ecosystem looks more solid. It looks more diverse. Dare I say it, it looks more institutional. So that, you know, we're traders. Traders like things that move. So when this market starts to move again, the ecosystem is immeasurably better than it was in 2020 and 2021. There's greater market access today than there was last year. So Bitcoin trades above 60,000 last year. I'm telling you, there is a better ecosystem today than there was then. Look at LMAX Digital again. You know, we only did spot last year. Now we're launching derivatives on a listed MTF, centrally cleared with SIX Group in Europe. That type of thing is happening the world over. So the green shoots really are the fundamentals that I started this chat with, right? The fundamentals of traditional finance that are now coming into crypto. And I repeat, those fundamentals with the imagination and creativity that comes from this new asset class excite me more than ever.
So maybe I would love to get your opinion just in closing. In why do you think some of the best companies end up getting built during these periods of time, right? It's not when everything is going up and to the right and there's more money than God being thrown at you. Why is it that some of the best opportunities, both from an investment standpoint and an operation and building standpoint, happen during these lower activity periods of time?
Discipline.
Yeah.
That's it. Discipline. Every business, you make enough money Monday to Friday to pay your bills on a Friday, right? If you don't, you're not going to have a business, right? Understand discipline and focus. You must have singular focus in what you do. Any single business, any single part of capital markets. And when I look at the ones that have failed, the ones that have all changed the chief executive, by the way, I'm still here, and I will be for a while, but I look at the guys that have changed. I went in, I sat in their office. I sat there when things were plunging, when Terra Luna was blowing up. I asked them what they did. Oh my goodness, elevator pitch. It wouldn't have fitted in the Yankee Stadium, right? They were doing everything. Everything, from credit cards to lending to exchange matching, no discipline, no focus, and excessive corporate bloat. The ones that succeed have a core idea, a singular focus, and discipline that means they'll be here not just next Christmas, but in 10 Christmases' time.
Very well said, David. Thank you very much. I always appreciate our chats. Guys, please give David a big round of applause.
Thank you, sir.
Thank you.
Enjoyed it.